Sage here for kalkinemedia. Please subscribe to the channel and press the bell icon to be notified of the latest videos. In today's trending topic, we're covering which investments are inflation-proof. Inflation measures the level of price rise over a given time duration, and investors may find themselves in a tight spot when prices are rising, as inflation would eat away at the returns offered by the investment. And the nominal returns offered by an investment might be increasing. However, the real returns would be lower due to inflation, and thus investors prefer inflation-proof methods of investment, or those investments which benefit from inflation. However, it is essential to note that returns are not guaranteed anywhere when an investment is made. At best, inflation-proof investments could provide safety against the rising price levels. So before considering such an investment option, here are certain inflation-related aspects to consider. Inflation and types of investments. For inflation-proof returns, the investments must have certain characteristics that allow investors to enjoy real returns, and some of these include high-growth investments. Investors must focus on instruments that can offer high growth rather than simple income. Fixed income assets are generally the worst hit assets during inflation. And if the returns are growing at par or above the rising prices, investors can enjoy some level of security against the price rise. Real investments. Nominal assets are bound to be hurt under inflationary pressures. Assets like a certificate of deposit or traditional bonds are priced based on the fixed returns offered by them, and real assets are tangible and holds an inherent value. Thus, commodity prices are rising. The prices of these physical assets are also likely to shoot up. Investors can hold some amount of their investments as physical or real assets. Variable interest assets. Unlike the fixed interest assets, variable interest assets can be more useful in an inflationary environment. Interest rates may also rise with inflation, giving the investor a chance to recuperate his losses. Investments to turn to during inflation. Gold. Gold is considered a hedge against inflation, and gold has been used as a medium of exchange in old times, and it continues to be an asset of interest due to its intrinsic value. Unlike fiat money, gold holds an inherent value that makes it attractive to investors. When the domestic currency is losing value, gold is also used as an alternative. Investing in gold not just means buying a physical asset. Gold derivatives are also a standard method through which some level hedging can be done against rising prices. So individuals can buy shares and bonds in gold. Digital gold is soon gaining recognition among investors. Physical delivery can easily take place. And additionally, gold is a highly liquid asset and can be easily converted into cash. Commodities. One can invest in commodities like oil, electricity, natural gas, and precious metals to make use of rising prices. Just like gold, the price of these commodities rises with increasing inflation. Metals like silver and copper are also commodities worth looking at, and many of these commodities are seen as an indicator of rising prices. An important factor to consider in commodity trading is the impact of underlying demand and supply of the commodity. And factors of demand and supply make commodity prices, as well as the prices of their derivatives, volatile. Real estate. Investment trusts, REITs, investing in property during inflation can be a clever way to secure profits. Often property prices skyrocket under inflationary pressures and are highly reflective of the real value of the assets in the market. REITs gather pooled sums of money, invest those in property, and pay out dividends to their investors. The dividends paid out by the REITs are subject to taxation. Thus, investors must be wary of the level of taxation and how much returns would be achieved. REITs allow investors to invest as per their affordability. Dividend paying and growth stocks. Dividend paying stocks can be a refuge for investors in stressful times. If investors are losing out on their investment gains Due to inflation, dividend stocks give them an opportunity to lock in additional income. If the yield is higher than the annual inflation rate, then investors can obtain higher real returns. Growth stocks can also be a good option to invest in. Generally, when prices of commodities are rising, companies are also able to draw in higher profits. And while input costs are also rising, some stocks can outperform the industry average. These stocks are known as growth stocks, and they are generally issued by companies engaged in technology or medicine. And these companies can lock in higher profits due to new products or techniques developed by them. Geographic diversification. It is possible that only the domestic stock market is adversely affected by the inflation. However, international markets are not affected as badly. It is a good idea to invest in foreign stocks or international bonds to lock in profits in such a case. Treasury Inflation Protected Securities, or TIPS. TIPS are issued by the US government and are inflation-indexed securities. This means that their returns move in sync with the level of inflation in the market, and this keeps investors secured from inflationary pressures eating away at the value of their investments. The principal value, if TIPS increases as inflation rises, which is measured through CPI. However, TIPS may offer lower interest than other securities and government bodies, and these returns are government-backed and are thus considered secure. Thus, it is possible to obtain gains from the market even when the market is down. Investors must make wise decisions depending on the market scenario. Thanks so much for joining us on that report. If you like this information, please like, share and comment on the video below and subscribe to the YouTube channel. Press the bell icon to get notified of the latest videos, and for more information and regular updates, please head to the website kalkinemedia.com. This is Sage for Kalkinemedia.